Now, for the last 12 years, I don't know, Johnny, if you got me hooked up here to my computer, I bet you don't, huh?
Yes, sir.
You do?
Yeah.
Johnny's on his game. By the way, you got to know Johnny the camera guy. He's my guy. He's probably more responsible for putting those 2 million points on the board than I am. And when I say points, I mean you, subscribers, people that are loyal to this channel. We give $100 away every day. I don't know if that helps or not, Johnny.
Yes, sir.
That we pick somebody in the comments and say, here's 100. It's not a big deal. With inflation, it's like, you know, maybe $80 or something. But it is some money from Grant Cardone. Yeah. I'll sign it for you, send you the honey, and you do whatever you want with it. Let me see. I'm going to go Treasury, 10-year Treasury. Well, Japan's money right now, if you just want to look at Japan's money, they've been saying this. They've been saying interest rates were going to go up for at least 12 years, that I've been aggressively buying real estate. I've been hearing about these interest rates going up, and that has not happened, folks. In fact, every time they said they would go up, 10-year Treasury bills. There, I'm gonna get you a stock chart here on this so you can see it yourself. And we're gonna go out, let's go out 12, 15 years if I can find this, if it loads fast enough. Again, this show's about discovery, okay? Interest rates have gone up in the last couple of weeks, 3 weeks. It's been nuts. Look what it's done since August. Okay, you see my August down here? Here's August. August, it was 117. Today, it's almost 2%. 80 bips. That's called a bip, by the way. So when they break interest rates up, this is typically called a 10-year Treasury, is what you're going to be looking for when you're thinking about getting a mortgage or et cetera. My board's not. What's happening with my board? So you're going to look at the 10-year Treasury, and you can look at Europe's, you can look at Germany, you can look at Japan, because those countries, you got to understand, that's competition for money, right? So I'm going to see a zero, probably a zero in Japan today. Right now, America, the United States, has a 1.297 Treasury bill. That means if you bought $1,000, $10,000, or $100,000 and locked it up until this is going to be really, really important with what we're talking about today, 2032. Oh, beautiful. I got some new goobers. If you lock that money up for 10 years, they're going to pay you 1.92%. Okay, we're going to talk about today, how does that affect? What if it goes up a quarter for the next 9 Fed meetings? The Fed meets every 6 weeks. And they've said that the Fed expects to hike 25 basis points. That would be, let me see, that would be right here, a quarter of a point, 9 times. That's 1.75. So if that happens, that means the interest rates would be 3.6. The 10-year Treasury would be 3.6. That would be 9 6-week cycles from now. What would that be? A year and a half from now, March, I guess March, April, May, something like that. May 2024, we would be looking at a 3.6% Treasury bill. Now that is not the mortgage rate that you would have. Today, for instance, okay, keep this number in mind right here, okay? The 10-year Treasury right now, 10-year, I'm gonna put 10-year T, is 197. With the expectation it's going to go up. I'm going to talk about my real estate, my portfolio, the 2 homes that I bought in the last 6 or 7 months. I'm going to show you how it affects all that stuff, okay? So this money right here, today's interest rate, a national average for a mortgage is 4.24%. That's the national rate. So you're going to earn 1.9 from a Treasury bill, and you're going to pay a mortgage 4.24%. If it goes up, like they're saying, 175, and if this went up exactly the same amount as the 10-year, this money would be 9.9. Your interest rate on your home would be 5.99. How's that going to affect your housing prices? Will housing have to come down when interest rates go up? I'm going to cover that today, okay? With interest rates going up, will your home prices go down? It's a fair question. Will apartment values go down? okay? It's because I'm very, very concerned about deals that I've done where, for instance, I'm doing a deal right now. Did Ryan give me this? Let me see if Ryan gave it to me, okay? I'm doing a deal right now. It's in Panama City. I haven't done the deal yet. When I got a quote on this, the 10-year Treasury was 2.04%. The index, the Fannie Mae floor was 189. That means they will quote this money plus a spread. In apartments, in commercial real estate, they're going to quote this money plus a spread on a 10-year term, anywhere from 5 years to 10 years, okay? Or they're going to do a 30-day, this is called a 30-day floater, okay? Now, you're like, man, this is getting complicated already. You got to understand, you got to learn this. This is what I do on the show every Monday. I come here to try to explain to you what I don't completely and fully understand, but that I'm trying to get a handle on. I bought $5 billion worth of real estate in the last 12, 15 years. And I don't know it all. I'm telling you right up front right now for all you guys, oh, Grant Cardone don't know what he's talking about. Hey, look, I don't always know what I'm talking about. You know how many economists it takes to predict the future? If you put 70 of them in a room, they're going to all come up with basically some agreed upon concept. And in most cases for the last 50 years, all 69 of the 70 have been wrong. So nobody really knows what they're talking about when it comes to inflation, the effective interest rates, what's going to happen with the stock market, what happens with real estate. That's why many people say, look, man, just sit, find a good piece of real estate and know there's going to be ups and downs and hold long term. Same thing to be said about the stock market. So we got a quote on these loans, okay? We got a quote on this loan. And this quote is going to tell you a bunch. I talk about this in this book, How to Create Wealth Investing in Real Estate. I'll give everybody a copy of this book. If you subscribe to the channel, go to grantcardone.com/free books, grantcardone.com/free books. I'll send you the book. It's yours for free. Okay, this is How to Create Wealth Investing in Real Estate. And it talks about banks and the importance of a bank supporting your loan. So when we did this particular deal, this is a soft quote indication on a deal that I just put under contract. And they want to offer me money, short-term money. It's called a debt fund. Don't go away now. Don't go away. Don't get all, oh my God, I don't understand what he's talking about. I'm going to go back to the simple mortgage in a second. Okay, this is a debt fund on a commercial real estate transaction. 3-year floating rate. It's a 3-year. And I get 1 + 1. I get 2 extensions to go 1 extra year. It's a 3-year floater. And they quoted me basically 3.2 to 3.5. That's the starting rate. Now remember, in 3 months, actually at the end of this month, at the end of next month, the Fed's going to meet again and they're going to raise. If they raise the interest rates 25 or 50 or 75, they won't go that high. They're scared. That rate will change. This is a short-term floating rate. It does not stay the same. Freddie Mac quoted me 10-year money, and they quoted me 10-year. This will be fixed money the entire time, and that money is going to be about 3.5 to 370 for a fixed period of time, if I'm reading this right. Let me see. No, the implied rate is 3.5 to 3.7, okay? Now, in this case, this is 10-year money. Why would I do this, why would I do this, the debt, floating rate up and down, versus the Freddie Mac money? This tells you where they believe money is going, okay? I need to give you one more piece of data about this loan, though, okay? On this loan over here, they said that they would give me 70% loan to value. Over here, they really want to give me this loan. That's what that says. Over here, they offered me 59%. They don't want to give me this loan as much, okay? Because they think those rates are going to go up, so they gave me less proceeds. What does that mean to you? Okay, let's talk about interest rates, mortgages, your mortgage, housing, what's going to happen to housing, because it's a fair question. Rising mortgage rates impact the mechanics of the entire housing market and definitely impact the kind of real estate that many of you that follow me here, some of you in our club, that are out buying 4 units, 8 units, 12, 20, 100, 140, 200 units, it's going to affect you. While affordability could take a hit, buying real estate might be even smarter in an interest rate rising environment. Interest rates going up might actually benefit real estate more than you think. To be clear, interest rates do not directly correlate with home prices or commercial real estate. However, low rates typically, Johnny, I don't know if you have this image that I pulled up. It's an image of, if I can find it, the Fred, let me see where I can find this, the Fred rate. The Fred, I'm probably not going to be able to find it right now. Our number here, by the way, is 305-865-8668, 305-865-8668. Johnny, I don't know if you can pull that image. It's called the Fred housing mortgage. When interest rates basically went down, I'll show you what it's going to look like. Interest rates are going like this over the last 12 years. Home prices did this. Why? Because the cost of this money right here, as it goes down, as the cost of money went to zero, basically, I could pay more dollars for the real estate. Now, this is not the only thing impacting this story why housing is going up. Keep in mind, last month, I think it was last month, housing, you had houses in the last 3 months that went up $100,000 in Austin. You have rents across the country going up like in crazy numbers. Let's see, Johnny, where you at?
Let me know if this one's it right here.
Let me see, Johnny. No, that's not it, Johnny. It's the well, go ahead and show me that, Johnny. Just show me what that is right there. That's a 30-year fixed rate mortgage average in the United States. Notice this is all the way back to 1980, probably 86. I'm getting out of college about that time. And that thing has gone from, it used to be 17.5%. We will never see that again, folks, in our lifetime. Do you understand in 1986, when I was graduating from high school, that you would pay every 5 to 6 years, you would pay in interest what the price of that home was. Today, with interest rates, the average rate today is 4.2%. 4.24%, okay? It would take me 25 years. In 25 years, you will pay 100% of the purchase price in interest. 4.4% for 25 years equals 100% of the price of the home. So if you paid $400,000 for a home, okay, let's say you financed it all. You're not going to finance it all, but let's say that happened. You would then have paid $400,000 in interest to the bank. So you better be able to sell that house for $800,000. Now, in the last 2 or 3 or 4 years, you'd have made big money on this house. So don't let these, just the interest rate scare you to death, because the reality is interest rates could greatly benefit. Johnny, I sent you that email this morning. I'm looking for it right now. I am so sorry. I dropped the ball. 305-865-8668. Johnny, can you send it back to me? I cannot seem to find it for some reason.
I'll send it to you right now.
Sent. I'm looking for sent. I can't find it in my sent. I got issues.
I just sent it to you right now.
You did?
Yeah.
Well, that'll take a while to get back to me. Okay. So now, with interest rates going up, if interest rates go up from 4.24%, and they go up to 6.5%, what does that do to a loan? Okay, let's say the average home is $400,000 in the United States, and you're going to borrow $320,000. Well, you guys got to understand why this is going to keep going up. Prices are going to keep going up for a number of reasons. Number one, and in the past, when interest rates went up, housing stopped. But the difference today is lack of inventory is keeping prices high. 2, the amount of money in the marketplace today is unquestionably the highest ever in the history of the world. Number 3, there's no place for yield to go. People are literally buying homes today to rent them out that would have never considered being in the housing arena. 4, supply chain issues. You cannot get glass, concrete. You got problems getting supplies. You get problem getting epay woods, antique woods, even to a job site to build anything. 5, more regulation. Regulation is causing prices to continue to go up because it takes longer to build and it's more expensive. The cost to build because inflation to glass, cement, when you can get it, is going up. Even shipping something from Hong Kong today is 5 times more expensive and you're not even getting anything. I'm talking about the shipping container costs 5x more than it cost just a few years ago. Number 7, and probably the biggest reason why I believe housing will continue to go up is because investors are buying homes at records never seen before. I wrote this down. Investors were more aggressive in the final 3 months of last year. They bought 15% of all the homes that sold in 40 markets. Okay, 90,000 homes were bought. I remember when Warren Buffett said if he could figure out how to do it, he'd go buy 10,000 homes. 90,000 homes were bought. $63 billion worth of homes were bought in the last quarter of 2021, and those homes were bought. If I'm right, if my research is right, 74% of those purchases were made by investors, the highest percentage on record. Now, affordability is always going to be the game, right? Like, do I own or do I rent? Forget the interest rate for a second. Okay? If the interest rate plus the price is less than the rent, you would think, okay, if somebody could pay $1,200 a month and it's going to cost $1,400 a month to rent, they're going to be like, shit, man, I'm going to buy the house. And that's what you would think. You would always have this supply and demand. Do I even have a house to buy? That's a problem. Okay, then I got demand from other people that are willing to pay for the house. See, you can only pay $1,200 for the house, but an investor says, no, I could pay $1,400 and rent it, make some improvements, because I saw the flip show. I'm going to make some improvements on it. I'm going to rent it back to Johnny, and I'm going to rent it to Johnny for $1,800 a month. So you were complaining about $1,800 a month rents, and the investor went in there and raised rents $400. I mean, rents are crazy right now. Some places are seeing rents go up 50% in the last 6 months. I think Florida's like up. Is your rent going up yet, Johnny? Have they told you?
Not yet.
You sent it to me, Johnny?
Yes,
yeah.
sir.
This is what I want to read to you right here, okay? Investors buying home, 90,000 homes in the third quarter, just the third quarter of last year, were taking from the market, $63 billion. Single family homes make up 74% of all investor purchases. That's the highest percentage on record. Affordability is constantly a comparison of renting versus owning, while ownership may be cheaper here, by the way. You're always going to get hit with this value curve, okay? The value curve is, hey man, I get a little more house, I get a little more garage. But what else is the value today is different than what it was in the 50s and 60s. I want to own a home in 1960. I want my own garage. I want my own backyard, okay? Let me tell you something. That value has shifted today. That value is, I don't want a yard, okay? I don't need a garage because I Uber everywhere. And by the way, I don't want responsibility of a house. And I don't want a house without a network of people. Meaning, some people actually prefer to rent today than to own because they get a social environment. That's why you're going to see single family home rentals. You're going to see homes built for the purpose of renting become the next big thing in America. Rent versus own. When you talk about this rent versus own, remember this. Over here in this column, you have a down payment. Today, that down payment is at least 20%. So I don't know what a home costs here in Miami. Johnny, what do they cost?
Like 400.
Huh?
400 grand.
400. So Johnny's got to come up with $80K that he's been stacking away. He's like, how do I come up with the $80K? Okay, if he's got the $80K, he's like, I got to let go of the $80K, and now he's got a payment. Number two, he's got a 30-year commitment that does not come with renting over here, I got a 10 to 14 month commitment. I can even break that. Worst thing is I broke 7 months or 8 months of a lease commitment. Number 3, Johnny may or may not want responsibility. This thing over here comes with a tremendous amount of responsibility and a huge commitment that says, I'm going to hunker down right here and stay here. 4, amenities. This house cannot have, in any city in America, this house will have 10 times the amenities as a rental as it will as a home. There is no homes being built in America today that have swimming pools. Show them one of my projects, Johnny. I mean, an average rental. Look at this thing I'm buying right now. Okay, it's on the river in Miami. The location is ridiculous. It's brand new asset class. Okay, it's got a swimming pool that probably cost us $3 million to build the swimming pool. It's got security. It's got parking. It's all concrete block. In that same neighborhood to buy a house. Let me go to Zillow. We got any callers, Johnny?
We're full lines.
Full lines, always are, man. Appreciate you guys supporting me here. Hey, if you want to see how I'm doing on my real estate portfolio, tonight we're going to have a call, Johnny. I don't know if we can give them the link. CardoneCapital.com/Zoom. You can see the return on I'm going to share with you the returns on every single deal I've ever done. Zillow, Miami River. Let's see, Zillow, Miami River. Homes for sale, okay? Okay, Johnny, go back to where we were. Now I just put in, I don't know if this is accurate. See this little home right here? 2,100 square foot home. See this, Johnny? Get a boat right there, boat on the dock.
Oh.
Okay, $1.9 million. I'll bet you there's not a swimming pool. So what's this deal going to cost? $2 million. It's going to cost $400,000, and it's not going to appraise. It's probably going to cost you another $200,000, maybe $400,000, because it won't appraise. You're going to have to put $800,000 down. You're going to have a payment. You're going to have a payment on $1.2 million, plus you're going to have PMI, plus you're going to have insurance, plus you're going to have flood insurance, plus you're going to have maintenance. Probably going to have to fix the roof. How old is this thing? Look at this little piglet. Okay, you got landscaping, you got lawn mowers. It looks a nice little house right here, man. Man, my Wi-Fi is nasty, Johnny. Look at this. Got telephone wires in the backyard. No swimming pool. Told you there's no swimming pool. Bet you money there's no swimming pool.
That's nasty.
Is it nasty, Johnny?
Yeah.
Okay. Now, you are on the water. Okay. Now, next door to me, next door to this property, just down the street, you can rent from me for $2,300 a month. Keep that number in mind. $2,300. Okay. This $1,200 is going to cost $1,200. 12. Remember that interest rate, $1.2 million. $1.2 million times 0.0 divided by 12. $1.2 million times 0.0575 divided by 12. Okay. Payments on this house are going to be $57.50 a month. You guys wonder why rents keep going up? Show them my deal again, Johnny. Show them any of my deals. This just happens to be in the same market. In fact, there's the deal I'm buying right now in my image right here. I don't know if you can see it on mine, Johnny. Okay, similar. Go back. So I'm going to be at $2,300 to $2,800 a month. Okay, in the next 3 to 4 years, those rents are going to be $3,500 a month. We think we're going to be able to be at $3,500 by the end of next year. This is a great investment I'm doing right now. And you guys are like, well, what's going to happen with interest rates? Now, let me go back to the interest rate question, because you see why people are going to push to rentals, and why for the last 10 years I've been saying, look, people are going to rent in the future. Okay, for all the reasons that I'm sharing with you right now. You guys that are going to get scared right now, you're like, okay, you're an investor. And you're like, I'm investing in a deal, and right now I'm paying 3.5% interest, and I'm on a floating rate, and my interest rate's going to go to 5%. what does that do to my investment on my property? Okay, your investment was going to pay 6% with a 3.5 rate. You're on a floating rate, so now it's going to pay 4.5%. So you didn't make as much money, cash yield. But when interest rates go up, what does it do to this house that I talked about earlier? Let's say you bought a house for $800,000 and the payments are $4,000 a month. PMI, insurance, flood insurance, everything. It's $4,000 a month, and it's an old beat up house. You know what I'm talking about? It's 4 bedrooms, 3 baths. It's not brand new or anything. It's only $800,000. It's happening all over America. You put $200,000 down to buy this house. Okay, you finance $4,000 for 30 years. Plus you got some other expenses here, and your rate's set. Okay, why would this affect rental property? Because 40% of these homes right now are being bought by people that are going to rent them, and they're going to go in and fix the kitchen, the backyard, throw in some palm trees. They're going to do some little nice things with paint, and then they're going to be like, no, we're going to rent this for $5,000 a month. And somebody is going to pay it. Why? Because there's no supply. You don't have down payments. People want nice things, and this will also drive this rental property up over here, the one that I just bought. So don't get scared of interest rates is my message to you today. Do not get scared. They have been saying for 12 years, we have been told, I'm going to go back now 5 years. There's 5 years. We've been told, show this image, Johnny, if you can. This is since 2019. They have been saying interest rates have to go up. Okay, they didn't go up. They went straight down is what they did. Notice that's COVID. Let me go back 10 years, Johnny. Let me see if I can get a 10-year. I'll just go to all. This is since 1982. Show me where interest rates went up since 1982. Why is that? What happened? Okay, what happened that interest rates went to zero? And for all of you out there that have money in a checking account or savings account, and you think that interest rates going up is going to be good for you, the last people that will be paid because of interest rates will be savers. Savers will not benefit from inflation, okay? Housing, hard assets, cash flow assets, real businesses that produce real income or have chances of producing real income. The losers will be Treasury bonds, junk bonds, savers, checking accounts, savings accounts, Treasury bills. That will all be losers. You will never see in our lifetime interest rates like we saw back in the 80s. The biggest debtor in this country is the federal government. Okay, if their interest rates go up, they can't pay their bills now. Somebody said if we hit 5% interest, the federal government, 35% of the federal government's bill every month will just be interest. That means every 3 years, the $30 trillion that we owe would literally go up by $10 trillion. Okay, let's talk to our callers. So, to be clear, ladies and gentlemen, I predict that a year from now, interest rates will be at or below where we are today. National mortgage rate today is 4.24. Fed expects to raise 25 bips or a quarter of a point at the next 9 meetings. I suggest somewhere between now and the next 9 meetings, they're unable to raise interest rates as they want to. Okay, Johnny, let's talk to our callers.
All right, we got Mike from Louisiana.
Hey, Mike, are you worried about interest rates?
Not really, Grant. I just refinanced, but I had a goal to get 10 units by the age of 45. I'm at 42, and I got 8 units working on my 9th one.
That's awesome, Mike.
It did go up, though, a little bit. I was almost at 4%. Now I'm at 5% when I refinanced. But my main reason for calling today, man, is I need to thank you. Your knowledge, your thinking outside the box of what you do every Monday for people like me that are trying to make it like you did. I got to thank you. I mean, you dropping a lot of knowledge on us, and you're a different breed, man. You're a beast. And,
Yeah, thank you, Mike. I appreciate you saying that, man.
And I took what you said, I put it to the test. You know, you said family members say, "Oh, are you happy? You know, be happy with what you got. You don't need no more. I think you got enough. You're already blessed." The only family member that I got really root me on, because everybody say there's my daughter. For Christmas, Grant, you ought to see. I opened my Christmas gift. I had a cash flow hoodie she bought from me from your store. I was like, "How you know about this?" "But Dad, I YouTube Grant. I watch his real estate stuff too. I want to get bigger."
No, that's
so
awesome.
It's
man.
awesome, man. But I can't thank you enough, man.
Yeah. So Mike, when you
support
let me ask you. Thank you for all that. When you do a deal today, when you buy a piece of real estate, what kind of mortgage, what kind of loan are you putting on it?
I think it's the what loan we doing? I just did it too. It's not a
Freddie, Fannie.
no. It's just a bank. It's just a bank.
Oh, it's a regional bank. It's a local bank, huh?
Yeah, local bank. First American and Trust, whatever. But I'm at 4%. But my ninth deal I'm working on right now. I'm going to a good friend. I'm gonna put my money together, his money together. I'm gonna buy it cash, go back to the bank, refinance it, put all the properties as one again.
Yeah.
So I could go from 5% to 4.5%. So that 0.5% is $120 a month.
Yeah.
It's a lot of money. You know,
Yeah.
that's coming out of my cash flow. So I'm trying to get that interest lower, because he told me the more I borrow, the less the interest will go down. So
100%.
That's what I'm trying to do.
The bigger loans are cheaper. Like it's a shame that we live in a system where I could go borrow $1 billion and get money for, under 3%, and the person that needs the money is going to go borrow $100,000, and the interest rate's going to be 5.5%. It's
exactly.
It's almost criminal, man.
That's exactly what he told me.
Appreciate you, Mike. Appreciate you calling in. So
Yeah,
this
thank
is what
you, man.
Yeah,
Appreciate
this is what we're discussing. Now, he's out buying real estate that he can raise the rents on. Remember this, folks, okay? If the rates go up 25 bips, that's a bip, okay? Means a quarter of 1 point. If those go up for the next 9 times, okay, that's 1.75% added to the interest rate of your loan. In the next 18 months, how much can I raise the rents on the property? Could a property, let's say I have 100 units, and the property, let's say every time we do the BIP, I raise the rent $25. 25 times 9 is $175. Is there a chance for me to raise my rents even $175? Let me show you what that does for me. So before you guys start freaking out on the interest rate, 100 units times $175 times 12 is $210,000 in new value to the property, new income, new cash flow. Not new value, new income to the property. Let's say this loan was $1 million over here, and it went up 1.75. 0.175 times $1 million. I'm making all these numbers up. It cost me $17,500 a year to make another $210,000. Okay, now would you pay $17,500 a year to make $210,000? This is the first year, by the way. Interest rates can't keep going up forever. Rents can keep going up forever. We've seen them do that for the last, 2,000 years. It used to be, hey man, trade your sister, you can live at my place. Trade a donkey or a pig or whatever, trade something to eat and I'll let you live at my place. Now we're trading cash. Okay, next caller.
All right, we got Richard from Delaware.
What if I do this again the following year, by the way? Because these rates have to stop at some point, folks. What if I do it again next year, in the next 18 months? Now I got 420,000. Go ahead. Times, oh my God, it's getting good now.
Hey, Grant.
Hey, what's up?
Hey, this is my first time on the call.
Man, great to have you here. Appreciate you calling. Have you subscribed to the channel?
Yes. I've been watching your videos.
Yeah, this is a 35% return on my money, by the way. Who would welcome a 1.5%, 1.75% interest rate if it made you 35% on your money? Okay, go ahead, man. What's up?
Yeah, I'm 23. I'm looking to buy. I got money saved up. I got a good job. Just got married, a few months ago, and I'm trying to buy my first rental. I live near a major university in Delaware, the biggest in Delaware, and I sent you a link. I don't know if it's a number. I'm not sure if you guys got it, but I don't know if you could take a look at it. But yeah,
Give me the address. Give me the address on the little piglet.
All right. Let's see. It's 41 Madison Drive, Newark, Delaware 19711.
Newark, yeah, Newark. Okay, yeah, nice little tight market right there, man. How much is this?
Yep.
How much is this deal?
Ask for 151.
Yeah.
151,000.
Okay, so let's do this deal. What can you rent it for?
It currently says it was renting proper current rent for $1,275 per month right now. It's been on the market for about just 200 days, but that's what it's at right now.
Okay, what can you rent it for? What'd you say you could rent it for?
I'm not sure about what's currently being rented at $1,275 right now. I'm not sure if I'm going to increase the rent, or if I'm going to buy it, maybe put some work to it. And then
How much can you rent it for?
Sure.
I didn't hear what you told me. How much can you rent it for?
Yeah, currently renting for $1,275 per month.
$1,275 a month times 12 is $156,000 a year without me doing the math. Let me see how close I am. 1,275 times 12, 153. I'm sorry, 153,000. Okay, $153,000. Okay, and your payments are going to be 15,000. Sorry, I got a little carried away there. I'm used to dealing with different numbers. So $15,300. Your payment's going to be $8,125. You're going to make $7,000 a year, $600 a month.
Okay.
Seems pretty simple to me. Now, that's if you can get only $1,275 a month. The little place looks kind of nice. 1,200 square feet. That means you're only getting $1 a square foot. This is ridiculous, dude. There's no way you rent this for $1,200 a month. You're going to rent this for $2,500 a month, unless it's in a bad neighborhood. If it's in a bad neighborhood, who wants it? Nobody.
Yeah, I mean, it's been on the market for about.
Well, there's a reason why it's been on the market. You're in the hottest goddamn real estate market in the history of real estate. Since the beginning of real estate, since the first time we ever spelled the words real estate as two words, and this thing has taken 200 days to sell. It means something wrong with it. It must have some venereal disease.
Well, okay. So
check it out.
Check
it out. Or they could be tired of having it on the market, and you can go in there and steal that thing. Go see if you can buy it for $100,000, man.
Yeah, the last time it was rented was, it was bought for like 120.
Yeah, sold for 120 last time?
Yeah, 120. They said they just did like inspection on it or something, and saying that the owner is not at fault. So, something. Yeah, I drove through the neighborhood. It looked kind of sketchy, but it's right walking distance to the major university.
Well, good, man.
10 minutes walking
distance. Do your research. Don't compromise your location. Go see if you can get a loan on the deal. See if you can pay somewhere between 120 and the 150. Even at 150, it's a moneymaker. So if you don't know what you're doing, go.
Well, okay,
do you have this book yet? My brother?
What the book?
No, that would be a no. You don't have the book. I can tell you don't have it yet. Okay. So you grab the book. It's free. All you got to do is go take. I'll ship it to you. Just give me your damn address. You pay for the shipping. I'll ship it. I'll do all the work. I already wrote the book for you. I will not read it to you.
Okay.
But I'd be willing to if you're blind. Because I have it on audio, and I will read it to you if you need me to. Okay, man, appreciate you calling in. This looks like a good deal, by the way. I love that Newark, New York marketplace. Very, very compressed, very difficult to get into. It is a renter haven. The thing I don't like about New York, New Jersey, Chicago, Los Angeles, San Francisco is when the government turns on you guys, it will support the renter, and you will not collect your rent. That shit don't happen in Florida. Florida, Texas, Nashville, Tennessee, Georgia, Carolinas. You don't pay your rent, we kicking you to the street. Let's keep it real. Where you belong, by the way. Because if you don't pay your rent and the other 197 people do, dude, you're a problem to the community. I have a responsibility to the community to make sure that people are paying there. Not being overcharged, but being taken care of. The community has to support and take care of itself. And the best thing a landlord can do is not overcharge people, but exchange with people, keep their tenants there. Our goal is to keep the tenant, to make the resident. In fact, at our properties, we allow our tenants to invest in the properties, to keep them there longer. So we don't want crimes on our properties. We don't want drug deals on the properties. We don't want parties on the properties. We want families that want to be provided with a great value proposition, taken care of, residents treated like homeowners, not just tenants, and provide people with great service. We label all our properties 10X Living. Show them what we buy, Johnny. And then let's take our next caller. That little deal is a good deal, though, that I just saw. Look at this deal. I bought this deal in Fort Lauderdale, Florida last year. 310 units. We're 97, 98% occupied. We want everybody there taken care of. Okay, let me be clear. That property right there, I bought that 3 years ago. I want everybody, all the good people taken care of. If you're a bad person having a bad moment, like I had bad moments for 10 years of my life. And if I was renting for myself, I would have kicked myself off the property. I'm telling you, because I was not good for the people around me. So you want to live in a place, by the way, you guys that are renting, when you go and rent a place, ask them, hey, when's the last time you got rid of the bad people on the property? What are bad people? Criminals, people committing crimes, people not abiding by the rules and policies of the property, people partying on the weekends, people causing accidents, people wrecking cars, people that are causing trouble. You guys know what I mean. And that could be anyone, right? I want the property, because the value of the property can only go up if the place is filled and being taken care of. And the landlord and the tenant all need to win. Next caller.
We got Michael in New York.
But these interest rates, folks, I'm going back to these interest rates again, okay? These interest rates, don't let them scare you out of buying something. If you can borrow money for 3% today and they go up 1.5%, that is a 50% increase. That is terrifying, right? If you can raise your rents from $2,000 to $3,000, I would rather raise my rents $1,000 over the next 3 or 4 or 5 years and pay 50% more interest to do that. Because this goes on forever. Many of you also are paying your loans down, so that loan value is going up. The loan value keeps going down over time. So what? That 4.5% on that number is getting smaller and smaller over time when my rents can keep going up. So see the long picture here, the long game.
All right, we got Michael in New York.
Michael, what's up?
Not much.
One of the great rental markets of the world right there in New York City. And people don't understand that. Like, why are you always trashing on New York? One of the great rental markets in the world if you can collect the rents.
So I found this multifamily apartment unit.
What's the address?
For you, maybe 39 Northwest 7th Ave, East River Living.
Northwest.
Miami, Florida.
Northwest what? 39.
Northwest 7th Ave.
7th Ave.
It's a 34 unit.
Yeah, where? Miami or New York?
Yep. Miami.
Yeah, I see it right now. I saw it. I said, New York or Miami? He said, yep. Okay, man. Let's look at this.
It's something new that I've been doing. Sorry, I'm a little nervous talking to you.
No, you don't sound nervous, man. You sound like you've been smoking herb. You've been. Oh man, this is nice. 10,000 square feet. The rents are $2,100 a month. Watch this. No swimming pool. I'll bet you money there's no swimming pool here. How many units? How many units, my friend?
34.
34 units. The reason I know there's no swimming pool is because it's just not big enough. You need a lot of units. So this is going to be a boutique boutique kind of apartment deal. Rents are $2,200 a month. What did I tell you the rents of my deal were? $2,300. I mean, I got it all too. I got a private park next door that we're building out.
Brand new.
On the river, huh?
Brand new.
Brand new. Okay, this is brand new too, isn't it? Didn't they just rehab this?
Yep.
Yeah. So what's the deal on this, man? Tell me the deal.
Well, I'm new at doing this, so I don't really know a lot. What really I was hoping to do is mark it up, maybe a $500,000, I don't know, and get a commission off you to be able to get my smile fixed and to
Oh, you want to sell it? You want to sell it to me? You want to show me a deal? You want to show me a public deal? You want to show me a deal that's public? You want me to pay you a commission to fix your teeth? And by the way, this thing's $15 million. Yeah.
And you'd be getting the money right back because I'd be giving it to you so I could shadow you and you could.
Oh wow, man! Thank you, man. You're so good. You're so kind, dude. Dude, you're such a kind deal.
I mean, at least I feel like.
Oh, it does have a pool,
did
by the way. It
something.
does have a pool, fitness center. See, I told you guys I can be wrong. Look how quick I can be wrong. Yeah, I'm wrong. So easy to say. Yeah, so look, I mean, this deal's too small for me to do, right? I don't mean to sound obnoxious when I say that, but this looks like a deal they're going to build. It says it's a 4.7 cap. If it is, it's a screamer. Javier Mata has it. State-of-the-art multifamily building, 34 units, 8 floors. Looks awesome. But you need $4 million to buy this deal. Maybe $6 million.
Yeah, I don't have even close to that.
Yeah. So this deal might not be. So this is $15 million. I'll show you how this deal is going to work. You probably need, let's say you need $5 million to buy the deal. You're going to borrow $10 million. And the interest rate on $10 million in this deal is going to be about, let's say, $400,000 a year. Is that the right? Yeah, 4%. I'm going to figure 4%. Could be $500,000 a year. Let's see if we make any money here. $2,200. The rent should be more than that on this brand new deal, Johnny, don't you think? But that's what they said. So 39 units, right, times 12. 39 times 2,200 times 12. So it's going to produce 2,200. 2,200. Here's my math. Times 39 units times 12 times 0.95. $978,000 a year. Okay. There's your debt. So you got $578,000 to run the building. Expenses on this deal, I promise you, expenses on this transaction will be at least $450,000 to run that property. So you're going to make $128,000 on the deal. 128 divided by the $5 million you borrowed from me equals 2.56% return. And I'm going to charge you more than that for the money because I can make more than that. This is supply and demand, folks. This whole show today, interest rates going up is all about, okay, they went up, but where do I go? What do I do? Do I rent or do I buy? The biggest winners with interest rates going up will be the investors that bought the real estate. Because what happens to the housing markets when interest rates go up? Okay, I was going to make 6% or 8% or 10% on my real estate. Okay, so now I make 1.5% less. What's going to happen when that happens? I'm going to raise the rents. I'm going to drive rents up. Investors will drive rents up. They're buying the property now. Some people think 40% of all the housing stock in America last year was bought by investors, not end users. My name's Grant Cardone, and this is the Cardone Zone. I do this for you every Monday. Talk about your money, your finance, your business. We talk about real estate a lot today. We talked about interest rates. The Fed is going to raise 9 times the next 9 meetings, supposedly 1/4 to 0.5%. And I'm telling you right here, right now, do not let the Fed raising interest rates terrify you out of doing deals. Do not let it do it, okay? Real estate is still a great place to protect your capital. 2, to get appreciation. 3, to get big tax write-offs. Number 4, to take advantage of inflation. As things inflate, real properties go up in value. Thanks for watching today, and I hope you're one of our 2 million subscribers.